So it's been a long time coming. This is episode 38 of the Inside Real Estate Podcast, and today we have on the myth, the legend, Sean, the Mortgage Man Maloney. Cue applause. Thanks for coming on, man.
Yeah, no, it's an honor to be here. I know we've been talking about it for a long time, and I wanted to episode 38 specifically because it's a great number. That's how old I am. So I had to wait until we got there. Hopefully this comes out before I turn 39. Otherwise I'm going to look really stupid. But I'm really honored to be here. I've seen people on here, and I know that they get their message out, and the production quality is really great. So super excited to be a part of it.
Awesome, man. So I would say the vast majority of agents, at least around here, know who you are. But for those who don't, give us a little background on yourself.
Cool. I'll give you all the good stuff, the things that I want you guys to know, not the things that Brian knows personally. My name's Sean Maloney. I work with CMG Home Loans. This is my 10th year in the mortgage industry. I've worked for a few different companies, and the place that I'm at right now, I feel is it's a great place. It's a portfolio lender. It's the first time I worked for one. It was very different when I first came on, but I've acclimated really well, and I feel like I'm better equipped to serve my clients than I ever have been in my entire career, which is really exciting, and it's important because it's not as easy to do this job as it was in the past. So, you really have to be cutting edge, and you have to be ahead of the times, and these are tougher times if you ask anybody, especially buyer's agents right now.
Yeah. I mean, the market right now is, I don't know, I feel like it's somewhat leveling out and coming down to a little bit of an equilibrium. At least, it's still tough for a lot of agents. But what's your take on how things are right now?
Well, I have to say it all really goes to location. They say that, and I've heard that ever since I was a kid. You think it's a gimmick. It's not. In the borough of Westchester, houses are going for well over asking and no inspections. And, you're getting, in some cases, upwards of 50, 60, 70 showings and, half the amount of offers. So, to be a listing agent in Westchester right now, shout out to Mike Cianci. I think, that's a really, it's a great thing. But to be a buyer's agent in Westchester, you have to know your stuff, and you have to make sure that, you can set your client's offer apart. Then there are other places right now where houses are just sitting. They're either overpriced, or it's a school district, or there might be something wrong with the home. So it's really a tale of two markets right now. It's it's the haves and the have-nots. It's the people that are absolutely crushing it, and then the people that are really trying to figure out how they can establish themselves in business. And it's houses that are just flying off the market, the day of, and then there's houses that are sitting for a long period of time. And those houses that have been sitting for a while, those are really great for first-time home buyers because you can ask for a seller assist. You can go in a little bit lower of an asking price. You can ask for a buy down. I actually just did a buy down recently, and those are pretty rare. But then you have people where they're going $200K over asking, and they're not getting the house because somebody came in $250K over asking in cash. So the state of the market right now is all about the location in which the home is listed and where your buyer is looking. And, I have some people that have put in upwards of 10, 15 offers, haven't gotten accepted. And I've had some people get their first offer accepted. So, usually it's like here, here, and here. Right now, it's just like this. So it's an interesting market. And there is definitely a low inventory right now as well. In Chester County, it was like 250 homes or something for sale, which is an all-time low. I think it was like 33% lower than this time last year. And a lot of people had an anticipation that economists had said that this year was going to be the biggest buyer's market that we had in over a decade. That's not the case. It's definitely a seller's market for sure.
You don't think it's somewhat telegraphing that it could potentially go the buyer's market route sometime this year?
I would love it if it did. Obviously, that means more money for me. That's more business for me. But all I can do is I can speak to what's happening right now. And the first quarter of this year is absolutely a seller's market. I would love it if it turned into that. But am I seeing any indicators that it will be? Not really at this time, unless you're seeing something I'm not.
So, I mean, the agents are. You're right. It's kind of the haves and have-nots when it comes to the agents. There's some that are killing it and some that aren't. But how is it on the lending end? Like, are you guys getting crushed right now? Is this?
I think it's also the same thing. It's you have some lenders that are doing a lot, some lenders that are doing a little. I could tell you that we're all equally as busy. It's getting people pre-approved and going the extra mile for the client, trying to get their offer accepted, and then trying to cheer them back up again. We're playing psychologist here once they don't get the home of their dreams because somebody, gave some other crazy type of an offer that, they didn't think of or they weren't willing to do or they weren't capable of doing. So I think that there's a lot of loan officers that are crushing it, and there's a lot of loan officers that are like, wow, this is really tough. I don't think there's a lot of in between.
What's the difference, in your opinion, between the loan officers that are doing well versus those that are struggling right now?
That's a loaded question. There's a lot. I think what really comes to mind as a starter is when you got in the industry. What is your book of business like? If you had just got in the last 5 years, you came in a time where you just put up a Facebook status, say, hey, I'm quoting 2.5% on a 30-year fix, and then everybody is running to you to get pre-approved and to refinance. Those were easier times. Now, if you did not establish a book of business during that period of time with referral partners, because the refis, that's like the cherry on top. But, the real like meat and potatoes, not that you would put a cherry on meat and potatoes, but the real meat, the real substance is the purchase business, right? So I got in 2015 and started to establish referral partners at that point in time, and I have people that I've worked with since then. You always have to add new people because people retire, people go to other loan officers, or people just stop producing as much as they had. So it's kind of a game of establishing yourself, adding referral partners, and then continuing to add referral partners while you're maintaining and servicing the referral partners that you have. So what would make a difference between a loan officer that is doing a lot now versus that isn't? I would say it's how many. It's a numbers game. How many leads are you getting? How many of them are you pre-approving? How many of them are you convincing to work with you to submit the offer? Then there's another point of sale afterwards where they get their offer accepted, and then are they going to rate shop you, or are they going to shop for fees? Is there an uncle that pops out of the woodwork that happens to be a loan officer? You know what I mean? I've had a lot of people where, oh, my fraternity brother was, or my aunt's a loan officer. My bank, I went to, go get my bank statements, and they're soliciting me for their mortgage business. It is very cutthroat right now, actually more cutthroat than it's ever been. And, you have to be on top of the people that are sending you business and make sure that, they know that you're there for them 24/7 and for the clients, and submitting a pre-approval with your name attached to it is going to give them the best odds of getting the offer accepted. Then after that, you have the customer service experience, processing, underwriting, closing, post-closing, making sure they know where to make their payments. You're making sure that they know where to send their tax documents that come in, their end-of-the-year tax forms and stuff like that. It's not as simple as it's not just like a transaction and then see you later. We're there for the lifetime. Then you go into refinancing as well. Some loan officers, they don't even check to see, hey, will this person benefit from a refinance? We have an app called Rate Alert, where if someone's rate is, let's say they're 7.5, and the rates drop to 7.25. Rates are lower than that right now, but this is just for conversation's sake. We'll get an alert. I'll get an email and I'll get a text. Hey, so and so has a 7.5% interest rate. Rates have dropped to 7.25. I'll put a fee sheet together. I'll send it over to them. If they like what they see, we'll give them a refinance, and then we'll save them some money. You know what I mean? They also get to skip a couple mortgage payments as well, which that can make a big difference for people. I was just talking to my Uber driver actually the other day. Things are getting more expensive. People are not making more money. People are in some cases taking pay cuts to keep the same job or getting laid off. So what can you do there? Well, you just try to provide something to them that is affordable. You know what I mean?
Right. Yeah. Now, I know we talked before and we brought this up pre-show, but you had talked to me about how your company you're with now is different than other mortgage companies. I thought it was interesting. So would you kind of explain that a little bit to us?
Yeah. So every other company I've worked for, so I worked for 2 correspondent lenders. What they do is they borrow money, they lend it out, then they sell the loans on the secondary market, and they get what's called a yield spread premium. Then that is what their profit is after they pay the money back at in interest that they borrowed. Now, what's good about that? I'm not really sure. That's just kind of how everybody does it. That's like the majority of the companies that do it. That's all I ever really knew. I also worked for a broker at one point in time where we would shop it around for rates and fees and all that type of stuff. And, the rates tended to be a little bit lower. However, you lose control because they do the underwriting, and you basically pass it off, and then you just have to hope that this bank that you're passing off to does the right job, and you meet the mortgage commitment date and you meet the closing date. So for me, I like to have full control. I want to have the processor, the underwriter, the closer, all within, I could reach out and touch them. You know what I'm saying? My
Or
assistants,
strangle them if you need to.
Well, I didn't. I was about to say that, and I decided not to. I don't want to paint a bad picture, but yeah, that too. I want to have everybody there. So I went from correspondent to broker, back to correspondent, and then now the company I work for is a portfolio lender. We keep 95% of our own paper, and then we sell off the other 5%. The reason is that 5% gap, if we kept that, you'd have to incorporate and become a big bank, and that's not the case. We don't want to do checking and savings and money marketing and stuff like that. Just want to do mortgages. So what's cool about that is, the guidelines are a little bit looser. People's loans don't get sold. When your loan gets sold afterwards, sometimes it goes on a frenzy where it's with PNC, and then it's with Freedom Mortgage, and then it's with Rocket, and then it's with Chase Bank and blah, blah, blah. And people are calling me like, I don't know where to make my payment. All I know is that my loan's been sold and I haven't been followed up about anything. And then you have some companies where they get the escrow analysis messed up and someone's like, my payment just went up $600. Like, what the heck is going on? Well, I don't know. I mean, I did your loan. The loan has been sold. You're going to have to contact your new servicer. Well, who's my new servicer? So we don't do that. We keep all of our stuff in-house, and then we only sell to a couple companies that keep like the 5%. They keep those loans, and we have a rapport with them where I could pick up the phone and call if there were ever to be any issues. So the great thing is that we like the looser guidelines, and then also the fact that loans are not getting sold, so people know that they're with us, and then we also have the 5-year unlimited free refi program as well.
We'll get into that. So you mentioned looser guidelines, loans getting sold, payments going up. So let's take those one at a time for a second. What exactly does looser guidelines mean for either the agents working with their buyers or the buyers themselves?
So, when it comes to a government loan, the guidelines are the guidelines. That's FHA, VA, USDA. You know what I mean? Those are set by the government. We don't have any wiggle room there. The jumbo loans, we broker those out, and then, those are set by those investors. But when it comes to conventional, which is about 90% of my book of business, there is room for interpretation within the guidelines. And I've sent stuff over to an underwriter. I'm like, here's what the guideline says, but can we do this? And if it makes sense, they sign off on it. If they say, no, we can't, then, and it's the only way that we can get the loan done, then I'll reach out to management. I have access to the head of underwriting. I have access to the president of the company, the owner of the company. And I was like, hey, this can work. Like, let's make this work. And if you're portfolioing it, then you don't technically really have to follow those set guidelines as long as you're not selling it off. And I have gotten clearance to do things that other companies have not been able to get done.
Can you give me an example of one of those things?
Not really off the top of my head, but let's just say, it's a property that other people weren't able to lend on because of zoning or something like that. Okay. And then I send it over and they take a look and they're like, hey, if it fits this, this, and this, then we'll do it.
So in short, like there are in some cases where other banks may not be able to get the job done. Correct. You guys are able to. Okay.
I've had a lot of those situations since I've come here where people are like, hey, this bank can't do it. Can you do it? Sometimes we can't, sometimes we can. But there is always, as long as we can make a strong case and present it to the underwriter and show that we have researched the guidelines and we do see where the level of interpretation is, then we've actually had some really good feedback. And I've gotten things done where I didn't think that other people, other people couldn't get done that I didn't think that we would be able to get done. So I was very impressed by that, and that's a good reputation to have.
Now, loans being sold, how does that actually, like, okay, I close my loan with you, it gets sold. What are the biggest like upheavals for the people who bought the house when that happens? Like,
if your loan gets sold and it's through a correspondent lender, then chances are that it's going to get sold a lot. So what happens is it gets rolled up in to a privatized security, sold on the secondary market. Then those investors take it. Those loans are graded based off of the quality of the loan, and then they service those loans. They make their money off of the servicing. Now, why is that an issue? Well, you don't know what their servicing department's going to be like. Their servicing department could suck, and there's no level of communication, and you don't even know how to make your payment. You start racking up lates, and you're like, I'm trying to pay you. No one's answering the phone. There is no number for me to call, or no one's answering the emails. Whatever it may be. So that's something that people deal with. And then at the end of every year, they do an escrow analysis, and if I've seen this a lot where they're like, they do an incorrect escrow analysis, and they're like, oh, well, your taxes are actually this. Okay. And they're pulling up, the incorrect tax information, and they're like, now you're short on your escrow. And so now you can either pay a lump sum of X amount, which is thousands of dollars, or you could just pay extra $500 a month until you're all caught up.
So that's where the payments going up comes into place.
Correct, yes.
So, and then like if you're with one of those companies that does that and that stuff happens to you, there's really nothing you can do about it. You're just stuck at that point.
I have had people come to me and, I've helped them look up tax information or at least put them in contact with the right people. Sorry.
Yeah.
Put them in contact with the correct people, and then they look up then we have to get letters and we have to get this, that, and the other thing, but they only give you like 30 to 60 days to do it, to refute it, and then we put it back in front of them, and then it's been corrected. There's some companies where they do what's called padding, and then they want extra months of escrow payments, and that's their policy. So there's nothing you can do about that. So really, who's servicing your loan? I mean, it makes a huge impact on how quickly can you pay it off. Some people, they don't allow extra payments. Some people won't allow you pay half on the first, half on the 15th, which stops compounded interest. There's people that have, because they want to juice that loan. They want to service it for as long as possible.
Right.
So
now, if somebody is in that situation, right, they didn't work with the mortgage man, if the situation's right, could they help themselves by potentially calling somebody like you with a company like yours and refi?
Absolutely. No, it would be a great help to them. The first refinance they did with us, they would cost the normal amount of money, but refi is a lot cheaper than doing a purchase. But every refi after that for 5 years would be free. So yes, if someone's in an issue where their servicer is a complete nightmare, and we can provide an equal to or better rate, then yes, they can absolutely refinance with us, and we can we'll make sure that they're taken care of. I've never had any issues with our servicing department. No one's ever called me and say, hey, I don't know what to do, or I can't get in touch with anybody. Once you close with us, you have an app and you pay everything on the phone, and it shows an analysis like, if you pay X amount, then you pay your loan off in this many years. Like, we are pro you paying more. We're pro you making your payments, because we have over $100+ billion servicing portfolio. I don't know the exact number, but it's well over $100 billion, and that's how we get paid, is off the interest of that. So first and foremost, we are definitely want to make sure we're incentivized that you make your payments, and that's very important. So we are extremely transparent. We're extremely helpful, and if for whatever reason somebody wasn't getting the answer from our servicing department that they were looking for, they can reach out to me, and then I can be a liaison between them and the servicing department and get everything worked out. But I've never had any issues at all. And at other companies, it was almost just like close your eyes and hope that there's not any issues, because then you're spending half the day trying to figure out where they're making their payment, or why their payment jumped up, or who their loan got sold to, as opposed to doing the job.
That's crazy, because when people buy homes, and I would say probably the majority of people, like they're budgeting and making this decision to purchase this home based on numbers they were given, and not expecting something like that. Like if, let's say, it were to go up $500 or $600, that's a shitload of money for some people.
And it happens more than you would think.
Wow.
People post about it on the internet all the time.
I know things vary based on location and area and states, I'm sure. What's one of the most underutilized mortgage products that could help buyers get into homes right now?
I don't know about underutilized, because I don't have a statistic on what is used and how much it's used, but first-time home buyer, you should definitely always look into see if you can do a PHFA loan if you're buying in Pennsylvania, or whatever state you are buying in. See what that state first-time home buyer program is. Pennsylvania PHFA, you get a fixed rate, which is lower than any rate that's out there. It's no matter what company you go to, it's the same. It's set by PHFA, and as of right now, it's in like the low sixes. So it's sad to say, that's a really good rate right now. There's no points. You don't pay any points. There's actually our company does a reduced application fee for it as well. And then you also get up to 5% of the purchase price off your total cash to close. Now, when you get a seller assist, that can only come off your closing costs, but your cash to close is your down payment plus your closing costs. So 5% comes off that entire pool. Then you can also get a seller assist on top of that, and you're only required to bring $1,000 to the table. So I've had a lot of people. I have people under contract right now. I have people that are utilizing that. It does usually take a little bit longer to close. Typically like to see like a 40-day close. Depends on what their turnaround time is, how busy they are. Sometimes they are busier than others, but you can go to the website and it'll tell us what their turnaround time is, tells us what their rates are, and it also is double underwritten. So we underwrite it, we get the appraisal, we button everything up, We pass off the PHFA. They underwrite it. Sometimes they'll come back with more conditions that we have to clear, and then we submit it back to them. It takes a couple days for them to review. So if you're doing a 30-day PHFA close, there is a possibility that it would get pushed back a little bit. It's not a fast close, but again, not a lot of people are accepting those offers unless the house doesn't have a lot of activity on it. So, in those cases, most people aren't looking to close immediately anyway. So It's more so like for homes that have been sitting for a while, or houses that just haven't, got a lot of offers. And, I had somebody shopping for about 2 months and he just got under contract for one, and it's an empty house and it's in a state. So the sellers are like, hey, we sell whenever we sell. So that gives us some breathing room to get it done and to work with PHFA. But I would say that that's a really good program. We also have DSCR loans, and that's for people that are trying to buy an investment property, but let's say they're self-employed and they write everything off, or they don't have a ton of money, or they have a really high debt to income ratio. We basically just use their credit score and we use the rentability of the property to get them qualified. Those loans take a while to close. I mean, I would say that's probably 45, 50 days because that's brokered out and we underwrite it. Those people, the people that we broker out to underwrite it, they usually come back with a laundry list of conditions because it is a more higher risk loan. But at the same time, if someone's looking to add to their investment portfolio, then a DSCR loan is definitely the way to go.
Are there any loopholes or overlooked strategies when structuring a loan that can make an offer more competitive that you use or have used to success?
Well, if it's overlooked, then it's definitely by one of the loan officers that aren't doing a lot of business. I can tell you that. So when I have a client submitting an offer, what we try to do if we have the time, if somebody applies at 5 o'clock on a Sunday and they need to put their offer in 2 hours later, they get a pre-approval letter. But what I try to do is somebody applies during the week is get them what's called a mortgage commitment. And that's when I do the hard pull on their credit. I collect all of their documents. Then I submit to underwriting. It's usually, depending on how busy underwriting is, aka the beginning of the month or the end of the month. Beginning of the month a lot slower, end of the month very busy. It's 24 to 48 hours. They get a mortgage commitment, which basically states that the underwriter has already reviewed your income, your assets, your credit, job history, everything. And we are committed to giving you the mortgage as long as you don't quit your job, you don't open new lines of credit, you don't spend all your money.
The mortgage commitment is when the bank says, hey, this money is essentially...
You're shopping with cash.
Right. So you're going into an offer with that commitment.
That is correct, yes.
Wow.
And we can close significantly faster because there's no mortgage commitment date on the application. So typically, that adds another layer is that we collect more documents or updated documents, and it goes through processing, underwriting, back to processing, underwriting cleared to close it, then closing. We bypass underwriting entirely. We go from processing to closing.
Now, is this something that would be a perk for somebody working with a company like yours, or can all of them do it? And do all of them do it?
To my knowledge, every company I've worked for is capable of doing it. It's really ultimately up to the company and the capacity that they have. If they're really tight and the processors are maxed out and the underwriters are maxed out, then, they might turn it down. They might say, hey, you can only do one a month or one a week or something like that. Some companies might deny it altogether. I do feel that every company should have the capability of doing this, but I've submitted like 10 at a time and I've never gotten my wrist slapped. I've submitted one on Friday. I'm like, hey, they're putting an offer in on Sunday, and then it got approved on a Saturday.
Is this something you're trying to do for the people you're working with all the time, or is it like scenario specific?
I would say it's a case by case basis. If somebody is 20% down conventional, they're W-2 employee, they have plenty of money, they have 800 credit score, I can get that approved in a day, no problem. And why not? Why wouldn't you, right? It makes their offer stronger. And if somebody has an identical offer to them, one has a mortgage commitment, one has a pre-approval, they're going to go with the person with the mortgage commitment every single time. Now, if somebody has varying income where they get paid so many different ways and they have overtime or bonuses or commissions, and it's a real pain in the neck to calculate what their income is, I would like to send that over to underwriting for a full-blown commitment because I want to make sure that my income calculations are correct. So, it's for the people that are, really easy to work with. And it's not that, let me rephrase. It's for the people that are really easy to approve and the people that there's an extra layer to approving them.
That sounds pretty powerful, especially with the way it's been for buyers these past handful of years. Now, this one's for the realtors. What is one thing that realtors do or don't do that can actually make it harder to get their buyers approved?
That is a very good question. I provide the financing, not exactly there when they're submitting their offers. I think that, calling the agent and introducing yourself is something extremely important for agents to do. Copying me, the lender, on the offer. I think that's also really important. Like, hey, Sean Maloney with CMG Home Loans. Here's his email. Here's his number. Give him a call if you have any questions. I think that some people, they just submit the offer and they don't even tell me. And here's an agreement of sale. And I look at it and I'm like, I didn't know about you. The sales price is too high, or wrong loan program, wrong loan amount, whatever. I think that the people that take the time and really put the thought and the effort into it, they're the ones that stand out. Some people, I'll pre-approve them and I'll send out the pre-approval, and then like a month later, an agreement of sale just falls in my lap, and then I'm like, listen, this was not the parameters in which I approved them. So the people that communicate, that's the key word, is the level of communication with myself, with the listing agent, with the client. Hey, the house is up for 300, but in order to win it, we got to go in at 330. Now we're going to offer 300 with an escalation up to 330. Here's the numbers at 300. Here's the numbers at 330. Are you comfortable with this? You know what I mean? It's really, I would say that you have to communicate and you have to have a level of dialogue with the listing agent. And whenever my clients submit an offer, I always call the listing agent, assuming that I know the offer's going out. And I always put a good word in for the clients as well. And I say, hey, they're very well approved. Hey, we have a mortgage commitment, or hey, we can close very quickly. Hopefully I know the listing agent, and then that goes a long way. I've had offers accepted because I have known the listing agent. But, in order for a realtor to really make their client's offer stand out, it's very simple. It's just level of communication. And some people either don't know to do that, or some people have just been doing it for so long that they get lazy and they skip that aspect of it. And that the people that really communicate and put their best foot forward, they stand out, and the people that don't, they also stand out, but not in a good way.
Right. Yeah. I remember when I was selling, I never didn't communicate. I always thought it was better to have that line of communication with a good back and forth with the lender. I mean, like from pre-approval to everything, it's like if you have that relationship, and that communication is there, because I mean, there's shit that happens along the way for a transaction. And I think, so people actually just like, here's the thing, deal with it, and then there's not a lot of communication there.
It's sad how much that happens. So I'm very detailed when I send out my pre-approval. This person's approved for a conventional loan with 5% down, with a $300,000 purchase price, with taxes of $4,000 a year, homeowner's policy of $1,500 a year. They're looking in this area. It's very clear cut. And then some people, they take that and they're like, oh, we put an offer on this house for $350. Okay, well, why'd you do that? Like, oh, we can't make it work. Is there anything we can do to make it work? We're already scrambling. It's already stressful.
It's already a problem.
There was a Harvard study, the 10 most stressful things you're going to go through in your entire life. One of them was buying a house. It was right up there with pregnancy and losing a family member. Wow. So, why don't you try to make it as simple as possible? And if you're already starting off with that tension, I'm tense, the buyer agent is tense, the listing agent no longer has any confidence in us. The buyer is like, wait, I thought I was getting a house. What do you do when you get your offer accepted on a house? You tell everybody. Oh, wait, no, never mind. I wasn't able to. You know what I mean? So, yes, I have people where I have approved them, and then they go shop, and then next thing you know, an agreement of sale comes over, and I pray to God that that it was within the parameters that I set.
I think that's a good segue into, like, I want to talk about like relationships, because this business, real estate in general, like I'm on the marketing end of it, you're on the lending end. Realtors are actually dealing with the buyers and sellers. I think that relationships in this industry are huge, right? Yep. And from since I've known you, you've always made that like a huge priority for you to maintain, further, and build relationships with all the people that you work with.
Yeah.
How, of all the things you do, where would you put relationships in the pecking order as far as importance to success?
I mean, relationships are everything. I mean, I would say that the customer service experience, and when I say customer service, it's not just the client, but it's also the buyer's agent, listing agent, the seller's title, insurance, inspector, appraiser, anybody that I deal with, and also my own team. How was their experience dealing with me throughout a transaction, my assistants and processor, underwriter, closer. But in order to have that, you have to have a relationship with people. So when I sit down with a realtor for the first time, or a financial advisor or an accountant or an insurance agent, anybody that I'm looking to, exchange business back and forth with, I almost never really even talk about real estate. I try to get to know them, and I want them to get to know me to make sure that our personalities are a good fit to work together. I'm luckily at a point in my career where I can pick and choose who I do and don't work with. There's nobody that when they call me, I cringe before I answer the phone. And to start my career, there was a lot of cringing. Yeah. So relationships are at the tip of Mount Everest. They're the most important thing, and there's there's varying types of relationships, but the most important relationship is the relationship that you're going to have with that as a lender is with the buyer's agent, and then everybody else after that, because the relationship that the buyer's agent and I have, it transcends and it spills over into the client, who is obviously the most important person in the transaction, and then the seller and everybody else that we deal with. And I have some agents where something gets messed up and I can just call them and I can talk to them like you and I do and just be like, look, this is messed up. Here's what's going on. And we problem solve and we figure it out. Yeah. I have other people where they respond and they become frantic and they're like, oh, I don't know what to do. And, they just kind of shut down. I have other people, they yell, and I have people where they're like, figure it out. It's your problem. You know what I mean? So the best relationships that I have are the people where I got their back, they have my back, and we can make things work. Because like you said, there's always something that's going to pop up during a transaction.
Right. Now, and I mean, that's even going to, those good relationships are going to help you on a transaction by transaction basis. But at the same time, both of that working relationship or not well working relationship is going to affect your reputation as well as their reputation, because back to the client experience. Yep. What are some things that, like, okay, let's say it's a newer agent and they haven't been in the business that long. They don't know how everything works or haven't established themselves 100% yet. What are some things that they can do to go out and find good relationships with lenders?
You want to look at the company. You want to make sure it's a company that has your client's best interest in mind. Then you also want to sit down with the individual and make sure you two are going to work the same. I'm notorious for nights and weekends. I'll sit open houses. I'll send out pre-approvals to 2 a.m. I don't care. I don't ever complain about it. I'm thrilled because that means that, I'm doing money generating activities. So if you're a new agent and you have a full 9-to-5 job and you're going to work nights and weekends, well, you can't pair up with a loan officer who treats it like a 9-to-5. And you'd be surprised. A lot of them do. They are very productive between that 9-to-5 time, some of them, but, I know people that they work really hard from 9-to-5, and then after that, they pick up the kids from the school bus, they help them with their homework, they have dinner with the family, their phone's off, you won't hear from them until the next day. And that's a very prevalent thing. But they're effective within that period of time, but it wouldn't work for somebody who does this as a second job.
Well, I also think that especially the way things have been, and it's always like that in real estate. You always have people that need things in like wacky times, and it's like, if you're looking for that 9-to-5, your success is going to be capped.
Yep.
But I know when I had my license, and I ended up during my duration, I had like 3 go-to people that I didn't know who you were at that point. You probably weren't in the industry at that point.
What year were you there?
I got my license between 07 and 08, and I ended it probably around 2013.
Okay. So I was in college, and then I was landscaping.
Yeah. But I know I had 3 guys that I went to that were solid, but I didn't go seek them out, right? I kind of just, I had buyers, and then as I would work with a buyer and had a good experience, I was like, I like this person. And then we kind of would work and say like, okay, how can we build this out? How would you suggest that they go about finding them? You can look at the company, but as a new agent, probably a lot of that stuff is over your head anyway at that point.
Right.
So how's a good way that they can go find somebody like you?
I would ask the other people in your office that you're in, hey, send out a mass email. Hey, who do you guys work with? And then interview some of those loan officers. Maybe even make a Facebook status, and that's huge. And then meet with some of the, take a look and hey, this is somebody I think that I could work with. Sit down and meet with them, and see if you guys are aligned. Do you vibe? Do you have the same goals and aspirations? Is this somebody that I could see myself growing with. You want to have a loan officer that, there is it's symbiotic relationship
Yeah.
where, it's not only just complimentary, but somebody is sending you business and, they go back and forth. And, hey, I got people that reach out to me all the time. Hey, I want to get pre-approved. I'm looking in this area. I try to pair them up with an agent, A, that sends me business, B, that is in that area, C, that I feel like they would do well with. So, if you have a loan officer who's producing hundreds of millions, they're going to take care of their top people most likely. But if you have a loan officer who, is somewhere on like the lower range and, they're trying to grow their business, then you have a better opportunity of getting referrals from them. So, how do you find that perfect loan officer? A referral, just like all of your business. Ask somebody, and if they have, I would ask them, like when they're interviewing them, do you have an exclusive relationship with an agent where you send all of your leads to that specific agent, or do you round robin it? Because if it's not fair for someone to send all of their business to you and for you to never send anything back. That's definitely a big talking point when you're sitting down with somebody. But again, you want to make sure that this person and their team behind them are going to provide a great customer service experience and that they're sending out solid pre-approvals. Yep. Worst thing you could do is get a pre-approval from somebody, they go under contract, and then next thing you know, oh, sorry, we missed something, and then you have to cancel the whole thing. Yeah. They wasted their time writing the offer, showing the home, you just got the client's hopes up, there's no faith. It could be a really devastating experience. So you want to align yourself with somebody who's not going to be doing that. Yeah, for sure. Something you said in there that you were saying, like, all good information, but you did say, like, hey, you want to kind of vet the person you're going to be working with just as much. Like, hey, if it's going to be, it's got to be a win-win, right? But at the same time, one thing that I know about you, and I know mortgage lenders in general will do similar things, but I don't know anybody who invests in the success of the people they work with as much as you. I'm not saying you're the only one, right? But as far as like the people that I know, you're always doing things with, teams where it's like, hey, how can we do like a joint promotion, but where you're actually making an investment in what that promotion is going to be. That's, essentially you're investing in the agent first, because if they're successful, the business is going to come your way. Correct, yes. And there's been programs that I know for people that we both know, that were like cool incentivized programs, something, the one thing that you did with the veterans thing. Yep. The Homes for Heroes that you invested in, there was something that the agent probably wouldn't have done on their own. Correct. But you saw an opportunity to, create a great relationship. Talk about, like, were you always doing that from the beginning, or was that something that you found was like, you're like, this is awesome, I need to do this, and it's worked out successfully for you? A little bit of both. I have to say it's a constantly evolving learning experience, and constantly evolving market, constant evolving, community, and, loans and real estate. From when I started to now, it's night and day. So when I first started, I was like a sponge, and, I was in a sales office, which almost doesn't even exist anymore. At any given time, there was about 15, 20 loan officers that showed up, suit and tie, and they would sit in cubicles, make phone calls, and rarely ever left. And, I would talk to them and I'd pick their brains, and they had varying levels of success. Some people had been doing it for upwards of 40 years. So, I'd ask them what did and didn't work, and I add them on social media. I watched their social media. I picked and chose what I felt that I would do well and what was within my comfort zone, and a few things outside of my comfort zone, but I still felt that they would work. It's not just taking people to breakfast, lunch, and happy hour. It's not just going to sports games. It's not just, the camaraderie. It's really, how can I help somebody gain exposure? And, just tagging somebody in a social media post is extremely powerful. But another thing is, the client appreciation happy hours, or Christmas party at the end of the year, holiday party, whatever it is. That's ultimately the goal. Is that's your book of business as a realtor going forward, is every previous client that you close, whether they're going to be upsizing, downsizing, investing, vacation home, they know somebody, friend, family member, coworker, some random person on the street. So I encourage and try to be a part of the, getting together and stay in contact with your previous book of business, because that those are people that are going to take care of you going forward. Then you'll have to solicit business anymore. It's just constantly referral based. So, in the beginning, I had my tactics, and it was really just getting in front of people and sitting open houses and a lot of follow up, because you can sit there and have a great meeting with somebody, you never follow up, and then you see they're having closings with somebody else, and you're like, you know what, I never even bothered to call again. It's a lot of points of contact, a lot of touches, because ultimately these people are entrusting me with their paycheck, and I have to deliver, and I have to. Some people right off the bat, they're like, here you go, here's all my leads, let's go. Some people are like, hey, we're going to test it out, I'll give you a couple, if it goes well, awesome. And then other people, it was like a 5 to 10 year play before they started working with me. So, you have to have a value add, like why work with me over somebody else? But then you also have to show them that, once not only am I going to help them grow their business by, marketing and helping split things with them, whatever it may be to get them whatever type of exposure that is that they're looking for or didn't know that they needed, the exposure they didn't know that they were looking for. But also, they have faith that I'm going to take care of the transaction, and we'll be at the settlement table.
Now, you mentioned open houses a few times. Agents seem to be split on open houses. I don't blame them. I see both ends of it. Like, hey, it's more of, sometimes it's to appease the seller. Sometimes some of them are the mindset that they're never getting any business out of it. Others think it's very helpful in selling the house and that it's a way for them to get business. How is it for you? Like, are open houses successful for you, or is that, in your case, more just a perk to the agent?
Well, for me, first and foremost, it puts me in front of the agent for 2 to 3 hours, or sometimes 4 hours, depending how long we sit it for. So, what other opportunity am I going to get where we're going to be interacting and in front of for each other for that period of time? And then obviously I'm going to stay top of mind, right? Hey, Sean took a time out of his Saturday or Sunday or Thursday night or whenever it was to sit this with me to try to help me out and answer mortgage questions. Or, if it's a woman sitting by herself, I now feel safe because there is an extra body there in case somebody comes over with the wrong intentions. Or, if there's a whole crowd coming in, I work the crowd and I do crowd control and stuff like that. Make sure people sign in. They're collecting business cards. I can't really answer questions about the house, but I can direct them to the seller's disclosure and stuff like that. So, that's important. But, if I were an agent, what other opportunity are you going to have where you can find people that are potentially unrepresented looking to buy a home? They sign in and they check if they have an agent or not. They put their name, their number, their email address, and then fill out other couple points of contact. And if they're not working with an agent, you never would have met those people. You never would have had them before. I was just Sam Walls just sat an open house recently, and this kid's setting the world on fire. He's 20 years old, and he had a client that came in unrepresented, and he was sitting the open house for another agent, and he got them pre-approved through me, got the offer in, got it accepted, and boom, done. If he did not sit that open house, he would not have gotten that business. So if I were an agent, no matter how long you've been doing it, unless money is not an object to you, you can pass it off to somebody on your team, I don't really know, or somebody else in your office. What other opportunity are you going to have to be in front of people who are looking to buy a home? And if they don't have an agent, you could potentially be their agent if you sell them on working with you. I think that there's never an instance where it's a bad thing to sit in open house, and also gains a lot of exposure, for the clients, right? And if you have the signs and the balloons and, you put out, drinks and food and, cookies and stuff like that, stuff to distract the kids so that the way that they're sitting there and, playing or eating or whatever, and then you're talking to the parents. There's a whole formula to it. And I don't think that there's ever an instance where you should not sit open houses on all of your listings.
What makes Sean Maloney different from other lenders?
What you see is what you get. I'm very open. I'm very honest. I work harder than anybody I know. I'm not married. I don't have kids. This job is really my life, and my friend group are my referral partners. I don't have much outside of this. So, I put my all into it every single day of the week. If someone calls me 11 o'clock at night, I'm going to answer. If someone calls me at 5 in the morning, I'm going to answer. You're going to get 24/7, 365, 366 on leap year availability. You have a team of professionals that are behind me. So when I'm sitting here doing this podcast, they're in the office working on the loans. So, there's constantly people that are working. You have several sets of eyes, multiple years of experience behind everybody. We problem solve. We try, we'll make the bumpy road less bumpy. I will reciprocate, and I will, return leads. So if you give me leads, I'll give them back to you. Almost all of my agents can tell you that is absolutely the case.
And that's not the norm.
No, it's definitely not the norm. And I'm not just married to one single agent. I spread them out. If you're sending me business, and the more business you send me, and if you send it all over to me, you are on my radar, and I make sure that you get taken care of. And what better than get a lead from, a pre-approved lead from a lender? You know what I mean? It's bing, bang, boom, done. So
biggest single strength, if you had to put one, I know you have a bunch, but biggest single strength that will benefit a buyer working with you.
You mean other than my biceps? Sorry. Biggest single strength is communication. I know that I keep bringing that up, but it's so important. Again, relationships. Think about if you're in a relationship, boyfriend, girlfriend, marriage, friendship, whatever it is. Communication is the most important thing. I try to clearly communicate throughout the entire process, and there's never going to be an instance where it's like, what's going on? What's an appraisal, or what's a mortgage commitment, or what's a clear to close? I don't know how much money to bring. I don't know what my monthly payment is. Everything is extremely transparent. There is an amazing level of communication, so everybody knows where they stand in the process. They're not up late at night worrying. They're not wondering. They don't know. There's no confusion on what their interest rate is, or any fees associated. That once they are through, we send out an email and it's give us a review. How do we do? I just had somebody reach out the other day and said thank you for their professionalism. You did an amazing job. It was a really bumpy deal. We told the guy certain things to do, he didn't do. There was things that came up that, we did not anticipate, and the settlement took a really long time. And I was just like, I don't know how they felt about that, but I was available 24/7. I was on the phone with this person's accountant. I was telling him, what we needed. I was on the phone with his bank, getting the statements that we needed. And he left me a glowing review afterwards. He said, I'm going to refer you to anybody I know. And that one was a coin flip. So that's not the norm. Now, if I can navigate a deal like that, and leave the person with a very good experience, that's something that can be replicated tens of thousands of times.
All right, I got some rapid fire questions for you.
Oh God.
The weirdest reason you've seen a mortgage get denied?
I don't know. Off the top of my head, I've seen people lie about things. One person, I don't know if I should tell the story.
Yeah, tell it.
I'm gonna get in trouble. One person presented that they were an actor, and they were in the adult film industry, and that's fine. You can it's a source of income, but it turns out that they basically made it seem like they had their own company, and they were an actor, director, producer, which they were in a way, but it wasn't the way that they portrayed it, and we had to help them redo their taxes and all that stuff. So initially it was a denial, and then it turned into a successfully closed loan. But, everything wasn't adding up in the beginning. So as we did more and more research, you click that button and it's like, oh, okay, so this is what you do for a living. So yeah, that one, that stands out. But there was a happy, oh God, I don't want to say happy ending. It turned out to be a success story in the end, because we were able to get this person a loan, and I really hope they don't see this.
All right. If mortgages had a dating profile, what would the red flags be?
Bad credit, checkered job history, employment gaps, cash under the mattress. Those would definitely be some pretty big red flags for sure. Or people that are telling you that they're going to shop you 6 ways to Sunday, because that's never a good thing. Those are the things that I could think of off the top of my head.
The biggest lie people tell their lender that they think you won't find out about?
Oh man, there's so many. A lot of it relates to employment. People like, oh, I make X amount of money each year as self-employed, and then come to find out that no, it's like the Maury show. It's like, and that was a lie, because they write everything off, and then you look at their adjusted gross income. So Also, source of funds. A lot of people, I have this money, and it's very convoluted where the money's coming from. Those are the two biggest things that I run into is anything with whether it's employment history or how much money they make, or it's where the money's coming from. Those are the two big ones that I run into on a regular basis, whether they're lying or they just frankly don't know. That's two big obstacles that I come across like almost all the time. And I always think this is the last one, and it's never the last one.
If you could create a brand new mortgage product, what would you name it, and what would it do?
I call it the Maloney loan, and it would be for anybody that is self-employed. We would just look at their gross income, and that's what we would qualify them on of, because we know that those write-offs are most of the time just so they don't have to pay taxes. So we would qualify them just off of that, and we call it the Maloney loan. It's for all of our self-employed people, all of our entrepreneurs, just like you and I are. And it's very friendly for them, because as soon as people say I'm 1099 or K1, I get that like, ugh, you know what I mean? I get the ick because I already know what I'm up against, and I have the same conversation every single time with them. I'm like, listen, you write everything off. You make $500,000 a year, but on paper you make $50,000 a year. And the first phone call they make is to their realtor. He's saying I don't make any money, and I'm telling you, it's almost like Groundhog's Day. It's over and over and over again. So the Maloney loan will, whatever you gross on your tax returns is what we're going to use for your income.
The best piece of advice that you would give to a buyer getting into the market right now?
Get approved right now and do it on a Monday, okay? Call me on a Monday. Let's do the application, whether it's over the phone or online. Get me your pay stubs, your bank statements, your W-2s, your 1099s, your K-1s, any pertinent information. Get me your mortgage statement. You said first-time home buyer? Or?
No, any buyer.
Get me your mortgage statement. Get me any and everything that I need on a Monday. Let us review it, okay? If it's really simple, you'll be approved that same day. If it's not, then we might need a day or two. But that way, you are going to be ready to shop that weekend. Or if you're not, it's never hey, you're not going to be able to get a loan. Everyone will be able to get a loan eventually. We could set up a plan for you. We have a free credit repair specialist that will fix your credit for you. Or we can help you with your tax returns. Or we can help you tell you how much money to save off or what debts to pay off. But somebody who's getting into the market right now, whether you've bought, you've sold, it doesn't matter. Go get pre-approved right now. Okay. If you're not looking for a year, we'll do a soft pull on your credit. There's no impact to your credit. It'll pull in 2 of your credit scores, which is enough for us to get a good idea of what your credit is. Then we'll come up with a plan for you. And that way, when you see the house you like, you're ready to buy. Don't wait until you see the house. That's the worst thing that you could possibly do. Then I'm working all night to get you pre-approved just to find out that you didn't pay a copay at a dentist one time 6 years ago, and no one ever alerted you about it, and now your credit's a 620.
And then quickly tell us about that refi program you have.
All right, so anybody who does a purchase or refi with us, okay, a transaction with us, after you've made your first payment, you're enrolled in our rate rebound program. What that is, we do not charge you any of our fees. There is no application fee. There is no credit report. There is no appraisal fee. There is no lender fees whatsoever. We then also cover $1,000 worth of the title fees, okay? At that point in time, you have 5 years of unlimited refis with no lender fees and then $1,000 towards title. Now, once you refi, if you can do it within the first 15 days of the month, you skip 2 payments. The money that you save by skipping those 2 payments will wipe out the cost of the rest of those title fees, and then it's virtually free, okay? You get that for 5 years. Now, every other mortgage company in the country, you have to make 6 payments and wait 7 months before you could do a refi. With us, 1 payment, okay? We're the only people that offer that in the entire country. So 5 years, unlimited free refis, 1 payment in between each refi. So if you close in March, you skip your April payment, you make your first payment in May, and then you're ready to refi right then and there. If rates drop again in September, October, whatever it is, we'll refi you again right then and there. No money out of pocket. We can usually close it within 2 weeks. We're the only company in the entire country that offers that. And I feel bad for anybody that shopped with me and then they end up going somewhere else, because I tell them, maybe you found an 1/8 or 1/4% better interest rate. That's fantastic. Do you plan on refinancing when the rates drop? The answer is always yes. Okay, you're going to spend tens of thousands of dollars refinancing. With us, you will not. It's a no-brainer.
That in itself is a reason to work with you.
For sure. I feel bad for anybody who does it because once it comes time to refi, I know their first thought in their head, they're going to see how much it costs and be like, I should have gone with the mortgage man.
Solid, man. That's awesome. And best piece of advice you would give a realtor working with a buyer right now?
Get them over to me. No, I mean, if you're working with somebody who's all cash, God bless you because you're going to have a leg up on the competition. If you're working with somebody who needs to be pre-approved for a mortgage, make sure you get them to the right lender, not a bank, not a credit union. God, please, not an online lender. Get them to a local brick and mortar lender who has a reputation in the area, who's going to be available to answer questions on a Saturday, on a Sunday, at all hours, and, make sure that you have the most competitive offer for your client. I always hear realtors talk about, well, I have a fiduciary responsibility to my client. Okay, then why are they using Rocket Mortgage? All right. Why are they using Wells Fargo, who is notorious every year for getting sued for doing crazy stuff with mortgages, and people still for some reason go with them? The best advice that I can give to you, an agent, is get your client over to a well-known loan officer. If it's me, fantastic. I'd love to work with you. If it's not, it's okay. There's plenty of great loan officers around here. And then that is you doing your fiduciary responsibility to your client. If you're just letting them use whoever they found and you're just kind of rolling the dice, maybe it's going to be a good experience, maybe it's going to be bad. That's not you doing the fiduciary responsibility. And, it could turn into missing a mortgage commitment, into missing a settlement, unnecessary fees, ridiculously high interest rates. The best advice is get them to the lender, get them there as soon as possible, get them pre-approved, know the parameters of the pre-approval so that you do not exceed them, and then get them under contract, and then let us take it from there, and then we'll see you at the settlement table.
And it doesn't hurt to talk to you, or let's say somebody else that has a reputation like you, but I'm just saying it doesn't hurt for people to just talk to the lender, because if
Correct.
They're not happy, they can go somewhere else anyway. But sounds like you got a lot of good stuff to offer. How can people find you?
Just give me a call. My cell phone is my work phone. I do not have a work line. So call me at 484-798-9084. Add me on social media. I've got them all, primarily a Facebook guy because I'm a millennial and I was born in the 80s. But never really got a lot of traction with Instagram. But TikTok I still haven't figured out yet. But just call me and I guarantee I'll answer the phone. And if I'm doing something like this, I'll call you right back. I have 100% availability. I want to work with everybody who wants to work, and I will definitely help you and your clients, and I will make you look good. I will make sure that the deal closes, you get paid, and we have a successful transaction. So just give me a call at 484-798-9084.
Cool. And then last question. We ask everybody this question. Send us off with a positive message to the world.
Love is all you need.
That's it, man.
Awesome.
Thank you.